here's the thing, guys. If you haven't already, you know, went through the academy or went on the TV or watch an educator, make sure you do that, because when you come on the strategy training, you want to be able to understand the terminology, understand what we're looking at, and this is where the academy is going to help you out. So you want to make sure that you know what we're talking about, because the faster you can understand the terminology, the faster you can understand the strategy, all right? So y'all like the changes? This is all Paul. Paul being on it, Paul and Melissa. All right, so let's go. Same thing, Mr. GJ Scalping strategy, all right? So anything you do in life, guys, you have goals. I tell you guys this all the time. My goals in the scalping strategy, you know, is basically 5 trades per day minimum with a stop loss and profit at 4 pips. You know, so that's a total of 20 pips shooting for every day. Now, anybody that's been following me, you guys know when I'm really like hot in the market, like things are really going. I can call, I think one day I called on Thursday or Wednesday, I called like 70 something pips in one day. You know, not all day long, you know, but it was in different times of the day where I went hard. Like the market was giving me ideas and bam, I was calling pips. So 20 pips a day is what I shoot for. This is just me. You can shoot for more. You know, 25 trips on trades weekly with a stop loss and profit at 4 pips. You know, 100 pips total for the week. And same thing, 100 trades, stop loss and profit at 4 pips minimum per month, which is 400 pips total. Now, if you guys understand what 4 pips is in the market, that's nothing. That can happen in seconds. 20 pips a day, that can happen in seconds, minutes. That's nothing. You know, there's some traders that shoot for 100 plus pips per day, which is good. But with this strategy, my goal is to get your lot size to work along with your pip count. And that's where you capitalize on the market, all right? So these are my goals. You can screenshot it. You can, you know, take a picture of it. You can write it down. You don't have to use it. But this is something that's been working for me for the last 7-8 months. And I really want you guys to understand that, you know, goal without a plan is just a dream. If you don't have goals in life, and you don't set plans behind it, basically you're just dreaming. So if you have a goal, my goal is 20 pips for that day. My plan to back it up was 5 trades with a minimum of stop loss and profit, a minimum of 4 pips, stop loss and profit. That's the plans to back it up. My goal is to hit 400 pips a month, minimum. Well, here's my plans to back it up. So you have to have plans to back up whatever goal you're choosing, all right? So the reason for my scalping strategy is I catch pips quick. You know, I do weekly withdrawals. The market is moving fast, and I can trade any time of the day. Now, once you understand what those 4 bullet points are, you'll understand that there's nobody can stop you once you know how this market works, all right? Now, here's the thing. You have to personally find a broker that you're comfortable with. You do your research. You find a broker that you're comfortable with. What I recommend you do is find one with low spreads, because if you have low spreads, that's more pips you can get from the end result. Or if you have low commissions, that's more you can put in your pocket, you know, from the low commissions. And then find a broker that basically reimburse you on your deposits. So I have certain brokers I use. If you want to find out, you can message me on the side or go to the web, MrGJPipWalking.com, and send in a request, and I'll send you the directions on what I use. But basically find one, do your research, and it has to work best for your strategy, all right? Find one pair and marry it, all right? My wife is GBP versus JPY. The reason I use it because it moves between 100 and 200 pips daily, minimum. Now, it either can move up 100 pips and correct itself 100, or it can move up 200 pips and come back down, or it can move up more than that, or move down more than that. But find one pair and marry it. Basically, the more time you spend with one currency pair, the more familiar you become with how it moves. And when you know how something moves, basically, there's nothing that can stop you. Excuse me, guys. All right. All right, so study 2 or 3 indicators, guys. And if I'm moving too fast, I can stop this so you can take pictures, screenshot it, or write it down. 2 or 3 indicators. So the 3 indicators that I use is 1 The Ichimoku Kinko Hayo, aka the Cloud. This has been my best friend since I started. You know, I follow a trader, and you know, she was the queen of the cloud, and this is what I basically learned. Also, the RSI is another indicator I use, and then finally the Bollinger Bands, and I'll go over those so you can understand. But find 2 or 3 indicators that works best for you, and these indicators works for me in my strategy. All right. Hello. So here's how the cloud works. All right. It's a one glance equilibrium chart. All right. So you have the tenkan-sen, which is the red line. That's the money line. And then you have the kijun-sen, which is the confirmation line, which is this red line. All right. So here are some notes. When the red line crosses the blue line and it goes above, that's usually a buy signal. Okay. Vice versa, when the red line, which is the tenkan-sen, crosses below the blue line, below is usually a sell signal. All right? And when we talk about crosses, I'll break that down for you guys. So for example, right here, this will be a sell signal. This red line and blue line cross, the red line cross below the blue line, and if you guys look, it basically dropped. All right? That's the sell signal. So that's the red line crossing below the blue line. Over here, the red line crosses above the blue line, right here. And if you guys look, the market went up. All right? So you don't want to basically just stick on one indicator. You just use a few indicators, so 2 or 3, to make your confirmation on when you get an enter and exit a trade. All right? Now, the RSI. If the RSI is over 70, which is going to be down here, if the RSI is over 70, it's going to be a signal that you're going to start looking for a sell. That means it's overbought. All right, so if it's over 70, it's overbought. If it's under 30, below 30, which is down here, it's going to be oversold. So if something is oversold, you're going to be looking in for a buy signal. All right. Now, the Bollinger Bands is another form or an indicator that you can use when you're identifying the highs and lows when you're looking at consolidation. So the Bollinger Bands basically measures the high, which is up here, the high, and basically the lows. And you have, certain traders. I have a buddy in the Bahamas, Abaco Linden. He have a strategy that I'm going to probably get him to feature one of these Sundays. It's called a squeeze strategy. And when the Bollinger Bands squeeze, he knows the direction that is actually going, and he catches the pips going in the direction. So be on the lookout for Linden that we're going to have come on here. Also, too, Paul is going to come in and show you guys how to basically put your stop loss and profit from your computer. Like, we have so many things. I mean, you guys just see a website that we've been working on. There's so many things on the lineup for you guys where you're going to take this scalping strategy to the next level. And it's been stuff that's been back test, that we've been keeping on the down low, so you guys can be excited for when we actually launch. But the Bollinger Bands is basically something you want to shoot for. All right. Now, this is my favorite part, because I tell you over and over, leverage is going to be key. All right. So if you can sustain 200 to 400 pips, worst case scenario, this means if you get in a trade that goes the opposite direction for some reason, worst case scenario, you can sustain your account. And this is why leverage is going to be so important, guys. You have to understand this. I was explaining this on my last call. A plane takes off. It goes up, right? It levels off, and then it lands. Same thing in the market. If you look at Newton's law, every action has a reaction. If you look at Elliott's wave, it's going to correct. So the market does the same thing. So by you being able to sustain the amount of pips leveraging your account, you can't blow your account. And that's what my spreadsheet, it forces people to leverage their account so correct, no matter what's going on. So I strongly recommend you leverage your account. Leverage, leverage, leverage. Don't be greedy. Follow your goals. Stick to your plans. and follow the spreadsheet, and this will help you so good in this market. You know, proper risk management is key. And I tell people all the time, my first 3 months in the market I was strictly a trade taker. And I didn't understand leveraging. And that's what forced me into creating my own strategy and taking off and running with it and learning how to leverage. There's days where you can catch so many pips in the market, along with capitalizing on a high lot size, where you can make a lot. And you have to understand that leverage is going to be key. 200 to 400 pips, man. If you can sustain 1,000 pips, you don't even have to worry about no trade you get in, because you're not just jumping in a trade to just buy or sell. You're following a strategy. So if you follow the strategy and something drastically happened in the market that we had no clue about, that news may have popped off, your leverage is basically keeping you under control where you don't have to sweat. All right. Now, when we talk about scalping, we're doing two things. We're scalping on the impulse and we're scalping on the consolidation. Now, we wanted to, with this website launch, we wanted to make things so clear for you guys. Before, you used to see me on the call, putting my hand up here and putting it up here and explaining the impulse and all that stuff. You can actually go and have a cheat sheet on your trades when you're learning, and you can say, well, hey, this is how it looks when we're looking for an impulse, or this is what we're looking for in a consolidation. We decided to make this thing so clear for you guys. So scalping on the impulse is 70 to 100 pips before entering. Okay, and then it should consist of consecutive buy candles or consecutive sell candles, and then you enter on the correction. So for example, if you look over here on this example, this was an 80 pip move. So right here is where we started at 140.746. This was the impulse, a consecutive buy candles, numerous. Now it can be one candle, it can be numerous candles. It just have to be 70 to 100 pips. So right here, it came up to 80 pips. And what we did was we enter on a sell. So waiting for a buy on the impulse, we enter the correction, which was the opposite of what it was doing. And we enter on 10 pips, basically on the correction, which was the sell. All right? So that's the impulse what we look for. And we'll look at that on TradingView so I can show you guys some more too. This is the opposite, the impulse in the opposite correction. So the candle started here, and basically the impulse was all sell candles, and it ended here, right? And we enter on the correction. The opposite of a sell is a buy, and we basically entered 10 pips on the correction. All right? Consolidation. Basically, the consolidation is you determine from your experience in trading, the overall trend of that particular pair. And then you're going to find the highs and you're going to find the lows of consolidation. So remember, guys, the market moves three ways. It moves up, it moves down, and it moves sideways. Okay? So when the market is moving sideways, that's basically consolidation. Most of the time when you see the red and the blue line, the tenkan-sen and the kijun-sen shooting horizontal, that's a form of consolidation. So you find the highs and the lows. So for example, this was straight consolidation. You find the high, you find the low. And it has to be at least 10 to 15 pips for you to make some money. And basically you enter in the direction of the trend. So for example, the direction of this particular one was a sell. So what we would have done is we would have waited to get in, the candles get in the vicinity of the high, and then we would enter on the sell and catch it going down. And you can do this numerous times, guys. And then if you look here, when it actually breaks out of the consolidation, it's breaking out in the direction you're shooting on. So that's why you enter the direction of the trend, all right? All right, take profit. 10 pips. I like 10 pips because it's quick, it's fast, and it's usually 10 pips from your entry. Now, here's the thing. You enter a market here. Let's say you entered at 140.299 and you enter it as a buy. Your take profit, which is 10 pips, is going to be this line here. You add basically 10 from that. So 29 plus 10 is 39. So this is actually 11 pips, all right? But 10 plus 1 pipette, if we want to be exact. But 10 pips is what you're shooting for. This is the market, and this is the candle that you're making. You're expecting it to go up. So you put your take profit 10 pips, and bam, the candle shoot up 10 pips, and you're good to go. It hit your take profit. You made cut your pips from there. All right. Now here's the thing. A lot of people say, okay, how do he even know what, how to put 4 pips in profit, or what do you do, or how can you do it? Well, we got it right here for you guys to see it, to visually see what we're talking about. All right. So my ultimate goal every day is 20 pips. You guys know that. Okay. My goal behind the 20 pips, my plans behind the 20 pips is not really for my take profit to hit. My goal is for me to get in profit. The faster I can get in profit is game over. That is a risk-free trade. So if you get at least 5 pips in profit, you modify and you put your stop loss in profit. So for this example, we enter the same trade as a buy. We put our take profit for 10 pips. But when we get to 4 pips in profit, we place a stop loss in profit here. So even if this candle was to come back down, it will knock us out of the trade in profit, risk-free. Any profit is good profit. Remember, I told you that. Because the market is moving fast when you're scalping. I'm telling you, there was a trade last week that I called. As soon as I called it, I think it was, who was it, Jennifer or somebody post, while I'm modifying in my take profit a hit or something like that. Like they was trying to modify it, and the market had already shot down to 10 pips of what they were shooting for. The market can move really quick, but the ultimate goal is to get 4 pips in profit, everyone. That is the ultimate goal. Once you do that, risk-free trade. And this is why my strategy is so powerful. I don't wait for the market to go up and do all that stuff and be patient for it to do what it has to do. I want my money, what's that commercial? It's my money and I want it now. So I get my 4 pips, I take that and I run with that, all right? So a summary before we go answer questions and go into trading view so you can see the stuff live. One is you want to set goals, guys. You have to set goals. A goal without a plan is just a dream. If you have plans behind your goal, you make it reality. So if your goal is to make X amount of dollars per week, if it's to show somebody or whatever your goals is in the market, if you want to be basically a master trader, a master scalp trader, master swing trader, whatever you name it, have plans behind it to back it up. All right. Number 2, make weekly withdrawals. We all had to make some extra income. All right. I got to watch what I say, guys. So we had to make extra income, so withdraw every week. Withdraw every day. Every single week I process withdrawals. I need to see extra income inside of my account. I could be on this phone trading all day long, all week long, but for me to get some excitement to trade the next week, I need to see something hit my account. So for example, even though I had a good week trading last week, I was able to withdraw and I see it hit my account and bam, I got some excitement. I can grow and gain energy for the next week to give you guys more pips. But if I'm not withdrawing, guess what? Man, I can't come on here and have no excitement with y'all. Like I need some excitement to basically come and basically give you guys trade ideas in the market. All right. 3, use a broker with low spreads. Like I said, if you don't have a broker with low spreads, you can contact me. You use a broker, you do your research, but use a broker with low spreads. I promise you'll be happy with the ending result, all right? Use 2 or more indicators for confirmation. You never stick to one indicator to confirm a trade idea that you go into. You want to make sure you have 2 or 3 that's working for you. Remember, guys, any profit is good profit. Even if it's 1 pip or 2 pips in the profit, that's profit you didn't have. All right. Then also you have to worry about if you cannot put your stop loss in profit fast enough because the market is moving so fast, just close the trade. Close the trade. You basically came up a few pips on that and you're good to go. All right? This is the biggest one. Do not over leverage. I don't care who you are, how much money you got, how much pips you can catch. Just stick to the plan. Don't over leverage. You'll be all right. And then for anybody that's learning, test a strategy with your demo account before you go live. You need to be 100% comfortable. You know, when you back testing, you want to back test at least 20 to 100 times before you actually go live with your own strategy or a strategy that you're following. All right. So guys, that is it for that. I think we could take some questions. Before we go into trading view, and then ending it off. I may call it, trades for you guys if I see anything. But to end it off, we have another $100 drawing that we're going to give. Go ahead, JR.
Hey, on the consolidation, when you said the follow the trend, are you talking about the trend of the day, or are you talking about the trend of just the actual movement of the consolidation with that period of time?
So good question. That's a great question. So anytime you're looking at the charts, remember this: the larger time frame tells the bigger story. Okay, larger time frame tells the bigger story. This is where leveraging comes in play. All right. So every trade I get into, I go off. I look at the whole. I look at everything. From the bigger time frame to the smaller time frame. I personally enter off of the 15-minute. This is just because this is what I started with when I was first going to trainings, and it just took along with me. So what I would do to find the trend of the trade is I would actually look at the bigger time frame, and I would incorporate the same strategy, the same indicators, the dips, the cloud. I would still incorporate all of that, so I can know eventually what the market is going to do, what that pair is going to do. And then you take it to the 15-minute and you still use it. If it's actually the same thing, more power to you on the trend. But yeah, you want to follow the trend when you're in the consolidation, because you don't want to be on the flip side of a consolidation. And it can get you, because the seven trades that I lost in the last 7 months was off of consolidation. And the trend actually it had a reversal and went the opposite direction. I have not lost one trade off of an impulse. So if you're brand new into scalping and following this strategy, I strongly recommend you start off with one thing first. Learn how to trade the impulse. Master the impulse. Even if you see trades ideas are being called, that's cool. Master one thing first. So if you know the impulse, if I'm backing 1,000% and haven't lost in 7-8 months off of an impulse, and that's what you want, you don't want no losses, then just be ready for when impulses are happening. Don't trade the consolidation. Because the consolidations is when you actually have to look at your indicators. When you see the impulse are happening, there ain't no indicators for me. I'm getting in that correction right then, because I know what's about to happen. There ain't no indicators for me. But the consolidation, which is where you want to make money any time of the day, is where you want to follow the trend of the trade of that particular pair. And yes, you look
David,
at
I have a question on your consolidation.
Go ahead.
How many candles will you take in that consolidation? I get real confused there. I mean, I can spot the highs and lows, but how many candles will you take in that?
So for me, I would rate about truly about 4 to 5. 4 to 5. But remember, we said find one pair and marry it, right? So when you actually follow in a particular pair like GJ, you know the moves it's about to make. So if you're in the Telegram, you'll see me post stuff like, okay, lines are horizontal now. So if we know it's hard, you might have an impulse in the correction, and then you know the time of the day where it starts to consolidate. For example, right. GJ moves the most from London breakout in the morning all the way to probably about 11, 12 o'clock. That's the most movement it has, right? And then after that, right, it starts to consolidate. If you guys been following me, you guys can contest that this is what happens with GJ on a daily basis.
Yes.
All right. And then you have Tokyo that opens up, right? And then you see and that opens up in the night, and you have some more movement where you may have a little impulse and you start to see some movement going on. And then it starts to consolidate. and then it starts to move again for LBO, the London breakout session. So if you know that, and you find where 3 or 4 candles start to consolidate, and you know the time of the day, you know what your pair is going to do, then you can start to identify the highs and lows a lot quicker than waiting, 5, 6 candles. There's sometimes when I can start off with 2 or 3 candles because I know that GJ may be exhausted, and it has to consolidate. Anytime the market is about to close, it's about to consolidate, and then it'll get its last little push up or down, and then it'll take you into the weekend.
So you think about 3 or 4 candles though, and that's enough to
I would say 3 or 4 candles.
Get in and get out.
Go back to look at what time of the day it is or what GJ's been doing. But 3 or 4 candles.
Right. Okay.
All right.
All right. Thank you.
No, good question. Anybody else have a question?
Hey, I got a question.
Go ahead.
Okay, can we talk about timing when it comes into the market, like morning versus afternoon, and maybe Monday versus Friday? So, like, if we're in a trade, when's our drop dead time? We want to get out of it, like on a Friday before the market closes. Do we want to stay away from Monday, or do we want to go in late? If we're trading, the pound versus the yen, is it better to do it in the morning, in the afternoon? So I'm just trying to figure out what's good timing. And I noticed that usually, because I'm over here in Florida, about 5 o'clock our time, the spread goes from about maybe like 5, 6 to like
every day at 5 o'clock, 5 to 6. The market is basically a swap. So even if you're in a trade during that time, you're going to get a swap fee. So you guys want to notice in advance. You get charged a swap fee, and then the spreads are ridiculous. So I don't even jump in any trades around that time. If I'm in a trade then I just go through it. But I don't never enter a trade, during, between, I would say maybe 2 o'clock, 2:30, and probably I don't jump back until probably maybe 7 p.m. I try to stay out of the market during that time. And you, like you say, you've been watching it. So you've now identified what it's doing. For me, with this strategy, GJ moves the most, in the morning for me. And it does because of the London breakout session. Most of the trades you see me calling on the way to the office is trades that when I'm in the car. And then at the office, I have trading view up on my desktop, and I'm working. And if I see something happen, I'll call trades for you guys then. But most of the time, it's in the morning that you see most movements. Stay out of the market when you're going to be around the swap time in. Also too, with the scalping strategy, you have, and this is where you identify, through the academy or, from a educator you're following, is you're going to understand some traders, if you're a swing trader, when that impulse happen, that's the swing trader excitement. They were able to get 100 pips. That's cool. They may have been waiting on that 100 pips for a couple of days, or maybe a week or a month. Who knows? For us, when we're scalping, we capitalize on every impulse we see, and we basically catch the correction. We're not shooting for that 100 pips. We're shooting for 10 pips on that. So that's you have to identify what you're looking for. Identify, what time in the market is going to be best for you, and then you just capitalize on that. But timing, the mornings are usually the best. At night, you can probably, catch a few pips. But if you notice, every time I call a trade idea at night, 9 times out of 10 is going to hit in the morning. If I call a trade in the morning, 9 times out of 10 is going to hit in the morning. So you have to know exactly what you're shooting for. If you know the market is going to go down, then it's okay to call a trade at night and fall asleep, and when you wake up, you're in profit. Or if you know it's going to go up, everything has to check off. And that's when you see me call trades at night most of the time. But most of my trades in the day can hit in seconds or minutes. At night, it doesn't happen like that. You actually wait more. So like if we were to look at trading view right now, we'll squeeze maybe 4 pips out of a candle, but most of the time it wouldn't hit 10 pips like that because of the time of the day right now. Does that answer that question for you, Joe?
Yeah, thanks.
All right, do we have any other questions? Anything else before we go into trading view?
Hey, we got a question about lot.
Okay, go ahead.
Okay, so if I'm using, like, in my lot, I'm using like 0.01, is the amount that's going in different from like $300 of my money than versus like 3,000 versus 30,000 versus 300,000?
Say that again for me.
So like the lot,
Okay.
I have 0.01 at $300, it's like maybe like 10 cents.
Okay.
But is it more if it's at $3,000?
Yeah, so the bigger your trading balance, this is where we talk about proper risk management. The bigger your trading balance, the larger your lot size can be. So proper risk management is going to be 1 to 3% of your trading account.
Okay.
That's what we shoot for. So if you have $100, 3% would be max. 100% would be comfortable. So if you have $100 in your account, basically 3% would be 3 cents. If you have 200, 3% will be 6 cents. If you have 300, 3% will be 9 cents. And that would be proper risk management. So here's the thing, on a 3 cent lot size, 10 pips is $3, right? 100 pips is $30.
Okay.
Right? But here's where it gets important. You want to compound that interest on your money. So you may start at 3 cents with proper risk management and just continue to grow it. But with a $300 lot size, 3% max would be 9 cents for you.
All right.
And the reason 3% is so good, just think about it. If you trade 9 cents, 10 pips is basically $9. 100 pips is $90, right?
Okay.
So for you to blow a $300 account trading 9 cents, it has to go at least 400 pips. 9 times 3 is 27. So almost about 300 to 400 pips.
Okay.
Is what you would be leveraged. Make sense?
Yes.
Anybody else? Questions? We're good. Let's look at trading view. See what we got. Let's see what we got going on over here. Remember what I told you guys I think this is going to do. I think this is going to be a fake out. Maybe, but no, I'm starting to see some dips in this cloud over here too. All right. So if I'm, oh, excuse me. So right now, this is what we're looking at. And this is a prime example right here why you don't stick off of one indicator. You guys see here the red line crossed the blue and this went down, right? So if I was looking here, the RSI at that point, it came down, where are we at on the RSI? RSI came down to about 36. And this is kind of why I don't trade on Sundays, really. When you're in the cloud also, that's basically the most riskiest part of trading in this cloud. And you have a lot of movement going on. All right. So let's see what we have here. GJ went up on Friday. This was the impulse we caught. We caught down the correction, and then it continued to go up. And let's see, I think we had the next high. You always look left, folks. GJ was down. I need to change time frames. Jennifer, you had the next high, right? I think you had posted that in the group.
I had it around where we're at now, like 144.80.
Okay, so usually when I look, I usually look to the left for the next high, just to see. And when we talk about the next high, that's the next highest zone, and just to see if let's say I was going into a sell, and I look left and I see the next highest zone, I know what my potential, pips will be in the negative. Does that make sense? I know before I get in the trade what I'm getting myself into, if that makes sense to you guys. But I wouldn't get in GJ right now, guys. But let me show you what we're looking at. If we see something here, right now the RSI is sitting at 46. I personally feel like this is going to be a fake out just because this dip I'm seeing right here. Earlier, we just saw horizontal, which was the flat line under the cloud. That's when we first started on the call, and I saw this dip. So that's why I said it was going to be a fake out. But if you guys see now, we're starting to identify a few dips over here to the bottom of the cloud. So it can possibly fake it out, break back above the cloud, and then this major dips here can pull it back overnight into London breakout session, back through the cloud, and go down. So you guys just hear what I'm saying, and overnight we'll see what happens. Sometimes I tell it and it happens just like that. But, you know, that's what I'm seeing right here. You know, but you have 9 minutes on this candle. RSI is 45. Cloud is dangerous. If it was above the cloud or below, I could have definitely give you guys a trade right now. But the cloud is dangerous. So let's just kind of go over impulse and some of the indicators. You guys okay with that? I prefer you guys to learn than to just jump in the trade.
Sounds good.
And this is where I just sit back and I don't do anything. All right, so this is what we talked about on the impulse. Right here is where this impulse happened. And let's see here. Impulse, we say 70 to 100. So this went to, started at 143. This was the tip of this candle here. So 143.81. So let's just round off to 80. So 20, that was 70 pips exact. Everybody see that? So it went up 70 pips, all consecutive buy candles. And in our notes, we say we're going to enter on the correction. So the correction was going to be 10 pips. So 10 pips on the sell would be 144.406. So 144.406 would have been right 406. I'm sorry. Right here. So this is the impulse happened, came up here, 70 pips. We entered right here. Let me change the color so y'all can see. Bam, and our take profit hit the green line. Everybody see that? Yes, no, maybe so?
Yeah. I'm not following where you're trying to go with that.
Go talk, say it louder, I can't hear you.
Yes.
Somebody said they couldn't see, or?
David, are your red lines and green lines, red and blue lines cross? Like, you know how sometimes it resets you, or no?
Okay, you're pretty low right now.
Your red line and blue line.
Are they cross?
I think they're switched up.
Oh, you know what? You're sure right. Let me check. That's probably why. So hey, I may be able to get y'all some trades. Hold on. I think as I just refreshed it over to this computer, I was on my desktop. And the way I do it, guys, is I just look at the default settings from my my cell phone, and I set it with TradingView. Okay, so this makes more sense, guys. Sorry about that. David, I was like, you see, I looked at it and I'm like, the red line crossed above, and it dropped. So I'm like, hey, that's not working out. But yes, so here, the red line crossed below, and guess what? You see it start to drop. Thanks, Andre. That's my buddy.
Yeah, also just so you know, it's the same way on Mr. GJ Pip walking when it pulls up the chart. It's the same way.
Okay, so hey, Paul, can we look into that, please?
Got you.
All right. Thanks, Andre. So yes, so the red line, and the reason that's so important, if you're just now coming on this, or if you're just now learning the strategy, remember we talked, this red line is the signal line. It tells you the direction of where the trade is going to go. So you have a crosshair, you had some sell candles, all right? If you go back over here, the red line crossed above the blue line, and look, the trade went up. If we come back here, red line cross below, bam, it dropped. We go back here, red line cross above, bam, it went up. This is one indicator. You still want to use your other indicators, all right? And you just can back test that same just back test it, you know, just look at the tenkan-sen and the kijun-sen and just back test it and see what happens, all right? So that's one indicator you look for, but what's that just went on the screen? Okay, that moved. All right, so now I'm more, okay, we're at 43 on the RSI. The red line crossed below. There you go. Paul, that's you circling that, or who's that? Can y'all see that circle on my screen?
Yeah, someone's using that drawing tool.
All right.
Not me.
All right, so like I said, I think this still is going to fake out and come back above the cloud, and then I feel like overnight is when this is going to break this cloud. So what I would do right now is kind of, you know, if somebody keeps drawing on the screen. I don't know who's that. But this could be a form of consolidation also, guys. So what we would do is in the next 3 minutes, these lines change. So if we look at this line change and it goes horizontal, basically it's creating some consolidation in the cloud, and then it could possibly break out, you know, or it can break down. But consolidation, we'll know in about 3 minutes what these lines do. Does it make sense?
Would you trade consolidation in the cloud, DJ?
The only way, that's a good question. The cloud is dangerous. Remember, I tell you this. The only way I would trade consolidation in the cloud, if I know it's about to break, I know for sure it's about to break below, and it keeps on playing around above it. So for example, let me show you. For example, you have where it will play around and the wick comes out, and so you want to make sure it clears, you know, the candle clears the cloud, and the second candle is where you enter on whichever direction. But if you look in the cloud, man, the cloud is having a lot of movement. So the only way I would really trade consolidation in the cloud is if I know it's going to break out in the direction I want it to go. And I would wait till it gets to the very low or the very high, and I would capitalize on it. But you can catch quick pips in the cloud. But in the cloud, man, those candles are moving. I promise you. That's the most scariest time to trade in the cloud, but that's the fastest pips you can catch in the cloud, to be honest with you. So I would do maybe a half size, lot size when you get into the cloud, if that makes sense. All right?
Hey, David.
Go ahead.
I noticed you have Ichimoku applied twice on
Just so my cloud can be darker on TradingView. Okay. So usually, you want me to show you how it would be lighter if I take it off? Mm-hmm. Okay. You see the difference?
Yeah.
So that's why I use it twice, so it could be darker on TradingView. All right, somebody had a question about a Bollinger Band, so I guess since I have this off, let me answer that for you. So the Bollinger Bands basically measure highs and lows, high, low. So for example, you would find where it's consolidating, right? So let's see right here. Perfect consolidation, right? This is the high, this is the low. Now I can look at this stuff from a naked eye and identify this, you know, and place my lines on the highs and lows. But you find the high and the low, that's all the Bollinger Bands is doing. Giving you the highs and the lows, and then you enter in the direction. Like I said, my buddy Lyndon in the Bahamas, he have this strategy with the Bollinger Band called a squeeze, where once it's squeezed, he knows it's about to break out. I want to learn that because that would help me in my scalping strategy also. So once I you know, back test that with him, you know, I'll have him come on and then basically and show you guys also. So highs and lows is what it's doing, and you basically enter in direction. You know, so this is another consolidation. Consolidation, guys, is scalper's paradise because you can clean up the market in pips. I love it when it's consolidating. You can make way more pips than just shooting and waiting for 10 pips or 20 pips. There's some days I can make 40, 50 pips off of a 10 pip call. Waiting on a 10 pip TP to hit and it start to consolidate. I can make 30, 40 pips on that consolidation easy. So this is going to be the key for anybody that's trying to learn how to scalp the consolidation. Once you learn how to do that, the impulse is easy. Once you learn how to scalp the consolidation, I promise you, like you would capitalize in the market any time of the day. All right. Anybody have any questions? Let me remove the Bollinger Bands. Anybody have any questions? Nope. Y'all quiet tonight. What's going on with y'all? Oh, y'all may be waiting for some money. Oh, I'm sorry, some extra income, some pips.
Hey, David.
Go ahead.
If you change the values on the Ichimoku, would it help you define the market better?
What do you mean by that?
Like if you change the 9 to a 6 and the
I've never done it, so I don't want to. What they say, don't fix nothing if it's not broken. Now here's the thing, it may be kept. So what I would tell you in that situation is back test it with a demo account.
Right. Okay.
And it may be better, and then you could say, hey, you know, not if, but hey, Mr. Gigi, I think you need to go ahead and add that to it because it's been working. But I've never tried it. You know, I want to make sure. I just follow what I was able what I learned when I first started about the cloud. There's so much more in the cloud training, but I just use I use the dips, I use the trend of the trade, and then I use the red and the blue line, and basically sometimes when it clears the cloud in the second candle, I know that's a form of the direction it's going to go. You can catch about 10 to 15 pips. What I mean by that, if it breaks this cloud into the second sell candle breaks, then it's going to drop about 10 to 30 pips. So for example, right here, this is a buy cloud, buy candle. It broke it, but if you zoom in, it was still in the cloud. So technically, you would have to wait for this second candle to break, and then you enter for 10 to 30 pips. I always shoot for 10. And you guys see that you would catch the 10 pips. Let me show you again somewhere. It has to break. So for example,
Dr. K training. Hello.
Yeah, Dr. K training. Hello is correct. That's where I learned it from. So if you look at this one here, this here wouldn't have been it because it was in the cloud. This here wouldn't have been it because the wick is still in the cloud. This candle where it finished, by it finishing in a cell, it break the cloud in the cell. By it finishing in the cell, you would have entered, you know, right here, 10 pips, and you would have caught it. So that's just something else. There's so much more in the cloud you can learn. All right, let's see what I got to give you guys some pips, but I don't want to force nothing because I know this is going to be crazy. So I'll probably post some trade ideas in the Telegram tonight, or I may, who knows, I may wake up and send some. I don't know. We'll see. But for you guys, make a note of this. Wednesday and Thursday is the most powerful day you could trade in the market. Wednesday and Thursday. Reason being, Sunday, market is kind of calming down from over the weekend. You know, Monday is still kind of shaky. Tuesday going into Wednesday is pretty good, but Wednesday and Thursday is, you know, where I've made the most amount of pips. I had the most amount of pip counts on Wednesdays and Thursdays. Also, if you're following on GJ, just be careful this week. We have a major, Andre, you should know this. You want to help us out on the information? You have a major vote happening on Tuesday, right?
Yeah, well, I think, I think that might have been pushed. Anyway, there's supposed to be some minor voting on Brexit tomorrow in the lower house as well. And then also Carney is speaking, and he's the head of the British Bank. He's speaking at 9:30 a.m. So, and that, according to Forex Factory, is a major, it's a major news thing. So anytime they have a folder on Forex Factory that's red, that means that the news can impact the market one way or the other dramatically and create an impulse.
Perfect. Andre is the guy who tells me everything about news, just so you guys know. He messaged me all day long. He talking about news. All right. So the lines, we had a new candle came out. It really didn't. The blue line is showing consolidation, but this red line is still shooting down. It's a signal line. I would kind of be careful. That's what I'm saying. If I would wait till it comes up I mean, and if we're looking at consolidation, this is where the highs and the lows are basically at. This is probably the high. Down here is the low. So I'll wait some more. This is 1, 2, 3, 4, 5. I would wait to jump in this trade. But I know if it goes up some more, we can probably catch it going down. All right, so just be on the lookout in the Telegram for that. You know, trust me, I'll give you guys some pips this week. No doubt about that. I prefer to make sure you guys are safe and getting better entries, so you're not sweating bullets when the trade goes the opposite direction. My goal is to try to get you guys straight in profit, and I don't see it right here, so I'm gonna pause on that. All right. Do we have any other questions? You guys need me to go over the impulse again, or anything on the consolidation? So that's it for tonight, guys. You know, I'll make sure you guys catch some pips this week. Sunday is more or less the training and making sure you guys understand what I'm looking at when I'm calling the trades for you, and not just jumping in the trades just because. All right.